Good day everyone. Welcome back to an accounting class, master class. We are doing accounting grade 12 and our focus is on November 2018, question 3. And this is question 3.2.2. We have already done 3.1 and now we are doing 3.2.2. It is always advisable that the learners have the question paper in front of them so that you are able to follow the lesson. Question 3.2, it is Tembiso Ltd. 3.2, it's Tembiso Ltd. And 3.2.2, it says notes to the balance sheet, statement of financial position. That's on page 8. 3.2, Tembiso Ltd, you are provided with information for the financial year ended 28 February 2018. And 3.2.1 is the income statement, which has already been done. And from the income statement, we noted that there was an accrued expense of 21,800, and there was also an accrued expense in respect of audit fees, this one. And there was also an accrued expense in respect of rent, which is 24,080. This should also be recorded in the balance sheet. So let us then do 3.2.2. 3.2.2, it says, notes to the balance sheet, statement of financial position for ordinary share capital, 7 marks, and retained income, 7 marks. The ordinary share capital, if you go to page 9 of your question paper, page 9 of your question paper, right, we do have information which is related to ordinary share capital account. That is information G. It says share capital and dividends. Authorized share capital is 1,600,000 shares. This was already entered in your answer sheet. This is how your answer sheet looks like. So the 1,600,000 ordinary shares that is authorized has already been entered in your answer sheet. And for us, we need to do the issued share capital. And the information there, it says information G, 1st March 2017, 80% of the shares were in issue. 80%. This business is authorized to sell up to a maximum of 1,600,000 shares. And if 80% was in issue on the 1st of March, let's calculate 80%. 1,600,000 multiplied by 80%. 1,600,000 multiplied by 80%, that is 1,280,000. So 1,280,000 shares in issue on 1 March 2017. These are the shares in issue at the beginning. Shares in issue on 1 March 2017. We are told that it is 80% of the shares. So if the authorized share capital is 1,600,000, if it is 1,600,000, if you multiply that by 80%, then you can see that the number of shares in issue at the beginning of the accounting period is 1,280,000. So if you go to page 8 and check how much capital we were having at the beginning of the accounting period, it was 6,976,000. So the capital at the beginning of the accounting period was 6,976,000. So the shares in issue was 1,280,000, and then the amount of capital was 6,976,000. And we are also given capital at the end. The capital balance at the end. This one has already been recorded in your answer sheet. The capital balance at the end is 8,816,000, which is also coming from the balances in information A. Right, let us continue with the transaction. The following transaction under information G on page 9, it says, on the 1st of May 2017, 300,000 shares were repurchased at 465,000 above the average share price. So 300,000 shares were repurchased. So we are buying back 300,000 shares. 300,000 shares, buyback of shares. And we are told that these shares were repurchased at 465 above the average. Now, the above average issue price is not recorded in the issued share capital note, but the above average issue price is recorded in the retained income. So that is where we are going to record this 465,000. So buyback of shares or repurchase of shares, and the above average price is 465,000. 465,000. Right. So the above average price is recorded in the retained income. In fact, there are three places wherein you will find the buyback of shares. The first note where you find the buyback of shares, it is the issued share capital, and the price that is recorded in the issued share capital is the average issue price. And the second place where you will find the buyback of shares is in your retained income note, and the price that is recorded in the retained income note is the above average price. And then the third place where you will find your buyback of shares will then be the cash flow statement, and the price for which that is recorded in the cash flow statement is the total price, total repurchase price. So you have the average issue price in the issued share capital, retained income above average, and cash flow statement, the total repurchase price. So let us then here calculate the average issue price. The average issue price, how do we calculate it? You take your capital balance and you divide it by the number of shares in issue. So our capital is 6,976,000. 6,976,000. 6,976,000 divided by 1,280,000. 6,976,000 divided by 1,280,000 equals to, then the average issue price is R5.45. Average issue price is R5.45. So 300,000 multiplied by R5.45 equals to 300,000 multiplied by R5.45 equals to 1,635,000. 1,635,000. And this must be recorded in brackets because we are buying back these shares. So our capital is decreasing. So 300,000 shares were repurchased at R5.45, which is the average issue price, and then the total amount is 1,635,000. And then the following transaction, still on information G, which is the third one, it says on the 31st of August 2017, interim dividends paid is 30 cents per share. Interim dividends paid is 30 cents per share. So we paid an interim dividend. The interim dividend is recorded in the retained income note under ordinary share dividends. So interim dividends is here. And we are told that the interim dividend that was paid is 30 cents per share. So now the question is, what was the total number of shares in issue on the 31st of August 2017? So if you look at our share capital note, you can see that at the beginning we had 1,280,000 shares that were sold to the public, and then we repurchased 300,000 shares. So the total number of shares in issue decreased by 300,000. We repurchased 300,000 shares, and then it was now 980,000 shares. So the interim dividend was paid when the total number of shares in issue was 980,000. So it will then be 30 cents multiplied by 980,000 shares. So 30 cents multiplied by 980,000 shares. That's 30 cents multiplied by 980,000 shares. 30 cents multiplied by 980,000 shares give us 294,000. So our interim dividend is 294,000. Right. So 30 cents per share, and the total number of shares that was in issue at that particular date, it was 980,000 shares. Right. 31st of October 2017, additional shares were issued. So we are told that there were additional shares that were issued, but the number of shares that were sold is not given, but we are told that there were additional shares that were issued. Additional shares issued. The number of shares that were sold is not given, and even the price at which these shares were sold is also not given. So, but it's going to be easy for us because there is only one amount that is missing here. We have the number of shares in issue at the beginning, the repurchase of shares, and we are also given the total number of shares in issue at the end. So we'll just calculate this amount, and it is going to be a balancing figure. So 1,480,000, we will work backwards. 1,480,000, and if you are working backwards, this 300,000 will be a plus because it is a minus. 1,480,000 plus 300,000 plus 300,000, and then minus 1,280,000, because 1,280,000 is positive because we are working backwards, so it's going to be a minus, and then equals to 500,000. So these shares that were issued during the year is 500,000. Additional shares that were issued during the year is 500,000 shares. So if you calculate here, you should be able to get 1,480,000. If you say 1,280,000 minus 300,000 plus 500,000, your answer should be 1,480,000. And now the next task is to get the amount that we have received out of the sale of these shares. We have the final answer, which is 8,816,000, and we are working backwards. 8,816,000 plus 1,635,000 minus 6,976,000. 6,976,000 equals to 3,475,000. That's 3,475,000. That's 3,475,000. So if you say 6,976,000 minus 1,635,000 plus 3,475,000, you should be able to get 8,816,000. So this 3,475,000 and the 500,000, we are balancing figures. These are balancing figures. So we are done with this issued share capital note. Now we have to close this one, the retained income note. The retained income note, we have the balance at the beginning, which is 376,600, and then we have a buyback of shares of 465,000, which should be in bracket, and then the following thing that must be recorded here is the net profit after tax. Net profit after tax. Our net profit after tax is given in information F. It says the correct net profit after tax is 959,400. So the correct net profit after tax is 959,400. Right, 959,400. That's the correct net profit after tax given from, we obtained it from information F. Right? And then our interim dividends, we have already calculated the interim dividends, which is 294,000. Then we need to now calculate the final dividends. Final dividends. And then on 28 February 2018, from information G, the last sentence there, 28 February 2018, final dividends were declared. So the final dividends were declared. So the amount for final dividends is not given. We are just told that final dividends were declared. So this amount is then going to be a balancing figure. So let's check. Do we have the balance on 28 February 2018 for retained income? Yes, on page 8 it is given. And then information A, there we have the opening balance, which has already been recorded, 376,600, and we also have the closing balance of 384,600. The closing balance is 384,600. Right. So interim and final must be in the box. Right. So let us then calculate and work backwards. From 384,600, we are saying 384,600, right? Then this one, because we are skipping this 294,000, because the combination of this 294, which is interim dividend and final dividend, is going to give us the total ordinary share dividend. We want the total, which is ordinary share dividends, which is part of the calculation of the final answer. So working backwards is going to be 384,600 minus 384,600 less 959,400, right, plus 465,000 minus 376,600. 486,400. So our ordinary share dividends is 486,400, and it's a negative amount, so it's in brackets. The ordinary share dividends must be subtracted. So now that we know that the total ordinary share dividends is 486,400, then we can be able to calculate the final dividend, because we know that this total of 486,400 should be made of interim dividend and final dividend. So if we take this 486,400 and subtract the 294,000 interim dividend, then we are able to get the final dividend, which is 192,400. The final dividend is 192,400. So this then brings us to a conclusion of 3.2.2, where we were required to do the ordinary share capital note and the retained income note. It is very important for learners to note that this note does not change. It is always like this. You have a balance at the beginning, buyback of shares, net profits after tax, ordinary share dividends, which is made up of interim and final, and then you have the balance at the end. 3.2.3, let us read the instruction here. It says, equity and liabilities section of the balance sheet for 16 marks. We are required to do the equity and liabilities section of the balance sheet, and this is what was given in your answer sheet. The shareholders' equity, it is very important to know the structure of the balance sheet, but this one is an incomplete balance sheet. It's only the equity and liabilities section. I hope the students are aware that there is also an asset section of the balance sheet, but this question required that the candidates needed only to do the equity and liabilities section of the balance sheet. So this is where it starts with the shareholders' equity, and then the total of the shareholders' equity is made up of ordinary share capital and the retained income. ordinary share capital and the retained income. And fortunately, we have already done these notes. We have the ordinary share capital final amount, which is 8,816,000. 8,816,000. That's the ordinary share capital total. And we also have the final answer of the retained income note, which is 384,600. So our retained income is 384,600. Then the total of the two amounts will then give us the shareholders' equity. So the shareholders' equity is made up of the ordinary share capital plus retained income. So 8,816,000 plus 8,816,000 plus 384,600 equals to 9,200,600. 9,200,600. So the shareholders' equity is 9,200,600, right? And then the non-current liabilities, that is loan. And then the current liabilities, you have your trade and other payables, you have your shareholders for dividends, you have SARS, in brackets income tax, that goes under current liabilities. You have your current portion of loan. You have your current portion of loan, right? But non-current liabilities, let's check our non-current liabilities, our loan. On page 8 of the question paper, we do have loan in information A, but we are given the opening balance. The opening balance in 2017 was 1,725,500. So the opening balance was 1,725,500. 1,725,500. So let us then check the transaction relating to loan. There is a transaction that talks about loan, which is transaction E on page 9. It says loan LSO Bank. Fixed monthly repayments including interest are 31,600. Fixed monthly repayments on the loan are 31,600. Because we have been given the opening balance, we need to subtract these monthly repayments. So if it is 31,600 per month, then per annum it is going to be 31,600 multiplied by 12, which equals to 379,200. So minus 379,200. We are doing these calculations because the balance that was given was the opening balance. So we need to effect the payments for the current year, which is 379,200. Check also the interest. In the transaction, it says capitalized interest amounted to 242,500. So this is plus 242,500. So this is the interest. Capitalized interest amounted to 242,500 for the year ended 28 February 2018. Interest for the next financial year is expected to be 162,000. So interest for the next financial year, remember now we need to take out the current portion of loan from this loan. That is going to be recorded under current liabilities. The current portion of loan, we are referring to the repayments on loan that will be made in the following 12 months, in the next 12 months, so which is a current portion of loan. Anything that is going to take place in the next 12 months is regarded as current. So therefore it should be taken out from the non-current liabilities, because the non-current liabilities are the liabilities that is still going to last a long period of time, which is more than 12 months. So the payments for the following accounting period must be subtracted here. the next 12 months. Our annual payment is 379,200, including interest. So if we are told that the interest for the following year is going to be 162,000. So it means if our annual payment is 379,200, which is loan plus interest, if we take out the loan for the following year, which is 162,000, then we will remain with the loan amount, which is 272,200. So out of the 379,200 that we'll pay, including interest, the amount of loan in this 379,200 is only 217,200, considering that 162,000 will be taken by interest. So our current portion of loan will therefore be 217,200. That's our current portion of loan. It will then go under current liabilities here. It is 217,200. Right, so let us then calculate how much is left under non-current liabilities. We have 1,725,500, 1,725,500 minus annual repayments of 379,200 plus interest, capitalized interest of 242,500 minus the current portion of loan, which is 217,200. So it is 1,371,600. Our non-current liabilities is 1,371,600. 1,371,600. And therefore our total non-current liabilities is going to be 1,371,600. The liabilities that will last a long period of time, the non-current liabilities. Right. So current liabilities, trade and other payables, we have our trade creditors here. Trade and other payables. Let's check for trade creditors. It's very important to know the notes to the balance sheets, the things that should go under trade and other payables. Trade and other payables, you have your trade creditors, you have your accrued expense, you have your income received in advance. That should go under trade and other payables. There is lot. Sometimes if you do not have enough space here, then even the shareholders for dividends and SARS income tax can go under trade and other payables. But it is important that the current portion of loan must be shown separate. So the trade and other payables, we have trade creditors amounting to 414,120. Trade creditors 414,120. That's the trade creditors amount. 114,000. That's 414,120. And according to adjustment B, which we have done in the income statement for audit fees, there was an accrued expense of 21,800. So we need to add this 21,800, which is part of that. And according to adjustment D for rent, there was also an accrued expense, which is 24,080. So plus 24,080. And let us check if there is any income received in advance. There is nothing. So it's only these two accrued expense, 21,800 and 24,080. So let us then close the trade and other payables. So 414,120, 414,120 plus 21,800 plus 24,080. 24,080 equals to 460,000. Our trade and other payables is 460,000. 460,000. Right? The shareholders for dividends, this is the amount for the final dividend. This is the final dividend. We have already calculated final dividend. Shareholders for dividends is just the final dividend. We have already calculated final dividends. when we were doing the retained income note, and final dividends was 192,400. 192,400. Why is final dividend recorded under the current liability? It is because the interim dividend is declared and paid at the same time, but the final dividends, it is declared in the current year and paid in the following year. So the final dividend is still owing, and therefore must be included under current liabilities as shareholders for dividends, and it is 192,400. 192,400. 192,400. That's the shareholders for dividends, final dividend. And then SARS income tax. SARS income tax, according to information F, we are told that 31,300 is still due to SARS. So we are owing SARS 31,300 after the provisional tax payments that we made, but still we are owing SARS 31,300. So SARS in bracket income tax is 31,300. So we are done with the current liabilities. Now the next step is to calculate the total current liabilities. The total current liabilities. The total current liabilities is 460,000. 460,000 plus 192,400 plus 31,300 plus 217,200 equals to 900,000. 900,000. So the total current liabilities is 900,900. That's 900,900. So now we need to calculate the total equity and what? And liabilities. Our equity is the shareholders' equity, which is 9,200,600. And then the liabilities are divided into two. We have the non-current liabilities with a total of 1,371,600. The loan, the liabilities, our debts that will last a long period of time, and we also have the current liabilities, the short-term debts, and the total for the current liabilities is 900,900. And then these three totals should then give us the total equity and liabilities. So 900,000, 9,200,600, 9,200,600 plus 1,371,600 plus 900,900 equals to 11,473,100. 11,473,100. So that's the total equity and liabilities, and the total equity and liabilities should be the same as the total assets, but in this activity we were only required to do the equity and liabilities section. So this then brings us to the conclusion of 3.2.3, the equity and liabilities section of the balance sheet.